Let's bring in ICapital Chief Investment Strategist, Sonali Basak. So, listen, I got to be honest with you, Sonali. They cut a lot more from the balance sheet than I thought they would. Go back a couple of years and they said we're going to because there was a time when we thought $1 trillion was inconceivable. And then it just felt like, okay, 9 trillion, 10 trillion, but they have cut a lot. Is it okay now in your mind for them to say, okay, we're done with QT?
Yeah, well, they kind of need to, don't they? And they've needed to, as you saw from short-term financing rates. For a little bit now, there's a big divergence between all that easy money you see in the market and what's happening in the plumbing under the hood. What happened here? Look at this chart. That was 2008. That was crisis mode. That was 2020. That was crisis mode. So you're right. They were able to take a bit off, but we are still elevated. Right. And that tells you that this is still a market that has been a little addicted here to a Fed backstop, to Fed support. And you can't really see a market functioning without it, especially when you think about the dynamics of the Treasury market, when you think about where the national debt load is, when you think about how much the Treasury has to rely on issuance at the front end of the curve. Right. They can't afford problems at the short end of the curve.
So then this number is bound to start to go back higher at some point, you're saying?
Well, we'll see about that. At the very beginning here, stopping this tightening cycle is one big moment, right? One step at a time. Let's hold the brakes here. Let's talk about the
K-shaped economy. We had a great conversation about that earlier, and of course how bifurcated the economy is. From the conference board, last time we heard from them, consumers making less than $75,000, their confidence fell. Those making more, they had a great increase, the largest increase, particularly those making $200,000. And this, even though we sometimes talk about young and old, younger consumers earning over $75,000 have been the most optimistic overall. So there are two economies, and how does the Fed address this one economy that's, getting smaller baskets when they go shopping?
This is one of the hardest things to really grapple with at this moment. Will rate cuts help the lower end of the economy, the lower income consumer? Let's think about it for a second here. Shelter costs have remained enormously elevated. And unless the longer end of the curve, that 10-year yield comes down, how much relief, Charles, can you really get?
It's come down a lot, though, and a 30. Are you surprised how much it's come down so far?
I am. And I think one big question we have is how much more it could go, because we still see mortgage rates well above 6%, well above 6%. There hasn't been a whole lot of activity unlocked on the heels of that. You want it to come well below 6%.
We need a 5 handle.
We need a 5 handle.
Yeah.
We need a 5 handle.
Let's talk about earnings, right? So this is the winners of today. Almost every one of these stocks are up in two things, earnings and AI. Caterpillar say, hey, we're an AI story now. Seagate, Western Digital have been resurrected as new AI plays. Corning, we know, making stuff with Apple, just almost all of it. But outside, if you don't have an AI story, it feels like your stock's not moving this earnings season.
Well, AI is going to be a big part of many industries now, and we see it just from the deals struck in the last couple of days, didn't we? A wide range of companies. That means telephones, that means finance, that means just a massive range here starting to see the benefits. Now, I would actually want to pull it back to one other point here, though. When you're looking at this AI story take off, equally, we have seen some very interesting large headlines tied to job reductions that are now drawing a lot of questions around, does this AI boom come at the cost of labor? Investors are demanding two things, Charles, right? They're demanding CapEx and they're demanding buybacks. They're not necessarily demanding investment in a labor force.
Right. I mean, listen, that's historically we've seen headlines, XYZ company lays people off, stock goes up. That's always one of the reasons I say the economy is not necessarily a stock market, but the selective market. Yeah. The equal weight, the inability for the equal weight has just come down tremendously. Historically, equal weight always does better than cap weight. It has until recently. Is this trend with us for the next foreseeable future?
How frustrating is this chart? When you look at the market, you do see, even in the last month, you saw some of the froth get picked out of it, but really very elevated still. It's unprofitable tech names. Right. It's a golden basket of most shorted names. It's stuff that's not the highest quality necessarily that's getting the biggest bid. So yes, you need to see AI, but I would also argue that even the companies that are seeing AI are not even seeing the biggest lift yet if you're outside of those top 10 names.
Real quick, Microsoft, Alphabet, Amazon, the big reports are coming in. What are you expecting?
CapEx spending to be at where expectations are or higher. I would say watch for the higher. We argue that actually expectations were kind of low coming into this cycle for EPS growth. These companies are spitting off tons of cash flow. And so there is a little bit of room here for more CapEx and some of the names, even some buybacks.
Hey, so listen, the bottom line is, to your point, that's what investors want to hear, and most likely they will. Want to talk to you some more? Join us at the panel later?
Yeah, I'll be there.
Thanks a lot, Sonali. Appreciate it. Of course,